Alright traders, welcome back to today's market briefs and bias for July 16th. Let's dive into the charts and I'll walk you through what I'm seeing and what I'm waiting for. First up, we've got gold on the screen. As you can see, I exited my gold trade right before the CPI released. I didn't want to hold through the volatility and that turned out to be the right call. Looking at the daily chart, gold is still in a strong uptrend. It's bouncing off the trend line and finding support near that 3,300 zone. But CPI pushed it down short term. If this structure holds, I'll be looking to get back in, but only after we see some confirmation. Switching to the 1 hour chart, you'll notice gold came back into that supply zone around $3,340. Sellers reacted again, so this is still a short-term resistance area I'll be cautious about. If we can break above that and retest, then I'll consider re-entry long. Now let's move on to the NASDAQ. We're still in a clean uptrend on the daily time frame, but I'm waiting for that pullback. Ideally, I want to see price come down into the 22,800 zone or even lower into 22,200. If we get that, I'll look for long setups, but I won't chase the highs. And finally, here's the DXY, the US dollar index. Now the dollar popped a bit after that CPI release, but overall it's still in a downtrend. You can see the lower highs and lower lows on the chart. Right now, it's reacting to a key resistance zone near 98.8. If it fails to break higher, I think gold could resume its bullish trend. But here's the thing, that CPI print was likely driven by tariffs, not organic inflation. Institutions know that. That's why I think this is more of a delay in rate cuts, not a cancellation. All eyes now are on PPI. If that comes in soft, it will confirm inflation isn't sticky. So for now, I'm waiting for clean structure. Staying patient. Gold is still bullish long term, but I want a better entry. And NASDAQ could give us a high probability setup on a pullback. That's it for now. Stay sharp and trade safe.